If you had to be in one single asset, Greg Mannarino is going to tell you what it is. I think it's physical silver. It's my favorite asset of all time. I love it. I think it's an incredible hedge for what is eventually going to come. And that is a debt market implosion. Rates are going to spike, pressure on the stock market, and it's going to happen very rapidly.
This week's special with Miles Franklin Precious Metal Investments. Kilo Valcambi Silver Bars for only $2.75 over spot. 10-ounce Nadir's Silver Bars for only $2.95 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're delighted to have this returning guest. Gregory Mannarino, the founder of TradersChoice.net, joins us again here this Tuesday, January 18th, 2022. Greg, thanks for coming back on Liberty and Finance.
Great to be here. Love your show. Thanks for having me. Let's do it.
You have found quite a following and very rapidly growing following in the area of trading, coaching, and helping people to make sense out of this crazy upside down freak show, as you call it, and help people to understand why a lot of the advice that they'd be getting either from mainstream sources or even from a lot of independent sources are going to lead them off the path of their best interest. We've talked together for years about the frailty of the fiat currency system, the expanding hyper bubble of everything, and also the anti-bubbles that exist. And along the way, you've taken a rather interesting, I would say, unconventional approach about trying to get people to gauge the realistic risk indicators that they should be aware of in the major markets so that they don't find themselves overexposed when things turn upside down eventually. And I remember we talked years ago about a thesis that was put out there by a major commentator who said, central banks are printing currency, that is all you need to know. And we talked about how that just keeps fueling, it's one of the factors that keeps fueling this bubble of everything. A lot of the viewers' questions that were submitted ahead of your arrival here today have to do with when will enough be enough? And you've developed this MMRI, Mannarino Market Risk Indicator or Index, to help people watch some of the key factors that, in your view, drive a look at when the real risk becomes evident in the markets. Can you talk to us? Because we've had some choppy times in the major indices recently. People are a little concerned when we've been in record territory after record territory, and now things are looking choppy. They say, oh, is this the beginning of the end, et cetera? Can you talk to us about your view of where the real indicators of risk come from and when you will actually get concerned enough, not when in terms of dates, but when in terms of things happening? When you see what, will you say, okay, now this is concerning to me, and whether it is yet or not?
Sure. Well, look, it's really, really simple to me. I try to, look at what is the main driver here. Okay. And we all know what that is. I think your followers do. And I know the people that follow my work do. It's the debt market. The debt market is the main driver behind everything. As a matter of fact, I've actually said this a lot, and I want people to understand what I'm about to tell them right here on your show. And I've said this before, but assets in general, and especially the stock market, derives value as to what is happening in the debt market. So what does that tell us? If the stock market in aggregate is deriving value as to what is happening in the debt market, well, the stock market itself becomes a derivative. Okay, so it derives value, derivative of what's happening in the debt market. And I've been saying this for as long as I know you, which is a long time. I've been telling people, watch the debt market. Watch the debt market. It's the key. It's the key to this entire thing. And everything else is just going to price off of what is occurring in the debt market. Okay, we've had central banks gone wild for years since the last meltdown, and all they've done is reinflate bubbles, create distortions across the spectrum of asset classes. It's not going to stop, in my view, until it does. So what I do is I really don't focus at all on what the stock market is going to do, because I understand it's going to derive value as to what is happening in the debt market. So when I see, like, I get up every morning, or I'm checking the futures overnight, what the market is maybe going to do when the opening bell goes off, I immediately direct my attention at, okay, what is the debt market saying to us? We've seen the yield curve in aggregate come up as of late. This is the market, in my view, pricing in a rate hike, which is coming this time. I've been telling people for the longest time, it's not going to happen. It's not going to happen at every FOMC meeting. In the last 10 years, I've been wrong twice. I think my record's pretty darn good. And I believe they are going to do something now, and it's because of the narrative. You know, they're ready to fight inflation. They missed their target by like hundreds of percent. We're at 7% now. They had their 2% target, but now they're ready to do it. Look, and they are going to. They're going to raise rates, but it's going to be meaningless. And the market's trying to price that in. The market right now, we've seen some volatility over the last couple of weeks. And this is no surprise. I mean, at the end of last year, I told people to expect this in 22, volatility in the stock market, especially because the Fed is going to do something, in my view. I think they're going to raise rates a few times during the year, but it's going to be insignificant. It doesn't mean they're going to stop buying assets. It doesn't mean they're going to stop suppressing rates. It doesn't mean they're going to stop supporting the market. So looking at the yield curve, the 10-year yield especially, I don't see any red flags yet. Yes, we've had quite a move higher in the 10-year yield, which is the benchmark that most investors and traders watch. I watch it all the time here. I'm also watching crude oil, which has gone crazy. I'm also watching the relative strength of the dollar, which is the Dixie, and then the MMRI, which you alluded to earlier today. We are, if anyone wants to look at it, it's free. It's on my website. We are in low, moderate risk. I don't see anything major going on. And the market, again, let's put this into perspective. Despite the fact that this market has sold off a little bit as of late, we're talking about an S&P 500 that is 5% off of its all-time record high. We've done nothing. So we've had last year, in 2021, this market hit a series of record highs, more so than we've ever seen in history. So, that's not normal, honestly, for a market to just go straight up. We need periods of time where the market trades sideways, consolidates, and or maybe gives back a little bit here. People aren't used to it. I mean, when the market, like on a day like where the market sells off 300, 400, 500 points, I'm referring to the Dow because that's what everyone looks at. To me, it's more the S&P 500 because it's the broader market, but everyone likes the Dow. It's 30 components, 30 of the biggest companies in the world. Okay, whatever. People want to look at that. That's fine. But they panic when the market falls. And I really don't understand that because, well, maybe I do. In one perspective is they're not used to it because they've seen the market do nothing but go straight up. But if you look back over the last few years, we've had points where the market has dropped. And I welcome these kinds of things. I really do, because to me, it looks like certain things go on sale. And I still feel that's what's going on right now. Like I said, there's no red flags here in the debt market other than it being a hyper bubble. I mean, it's a monster. It's a Frankenstein monster. But I still believe it's going to be fueled by the Fed. Nothing that they've thrown at this market has made any difference. They've shut down the global economy and the market still went higher. So yes, the market has yet, or the economy has yet to realize that, or the market has yet to realize that the economy is in free fall. Globally, this is a global phenomenon. The bad economic news doesn't stop. Inflation is surging out of control. But in my view, until there's a major change in the debt market, when Greg Mannarino sees the 10-year yield, okay, this is all I want people to focus on for the most part. When I see the 10-year yield going 1.9, 2.2, 2.4, 2.7, 3 in a very, very short period of time, that's going to be a red flag. And I mean a big one. That's what I'm going to say. It's time to maybe get out of the market or start getting short. For now, and I've been saying this for a long time, years, buy the dips in everything, not just in the market. Crude, when we went to 61, and I was saying buy that dip, and obviously precious metals, which have no real price discovery mechanism behind them at all. We know why. It's JP Morgan. Everyone knows it. Okay, buy low dips too. Cryptocurrencies, I feel the same way. And that's worked. It's worked for a very long time. And I think it's still going to continue to work until something major changes. And I don't see anything. What I see now is a market pricing in a rate hike, adjusting to what's going on here, especially the NASDAQ. We've seen the NASDAQ the NASDAQ is 10% off of an all-time high, and that's because the tech sector is rate sensitive. So in other words, these companies here, they like a low rate environment, and we're still in a really like negative real rate environment, but it's just getting the market rattled a little bit. It's an adjustment period, and the market wants the Fed to do something, in my view. When you see, for example, like a day like we had today, you have over the past few weeks, we got the yield curve moving higher. Cash is when the yields move higher, that means cash is leaving the debt market. Okay. When you got cash leaving the debt market here, that's putting some pressure on the stock market, which we've seen. Again, nothing major, 5% off the top of the S&P 500. So you got some cash floating around. It's just waiting for places to go. And I think once the Fed makes their announcement, it's going to find its way back to the stock market. I really do, because I don't think the party's over yet. I don't think central banks are done inflating. I've been telling people this for a very long time. They're going to inflate some more. They're not done. The Federal Reserve literally has no intention whatsoever on slowing down the pace of inflation. Their goal is to inflate. This is all deliberate, absolutely. We're in the middle of the creation of a new feudal system, and stuff that you and I have spoken about years ago. It's happening right now before our eyeballs. People should look at some of the archives, and they'll say, "Wow, this is kind of interesting."
Yeah, they aged well, those interviews. So let me press just a little bit further right into the heart of what you were talking about here. You said one of the things you're going to watch for is a runaway 10-year bond yield. Randy Turner asks, he would like for Greg to explain the signs that we will see that the debt markets are about to implode, and in which all capital markets around the world will implode. He understands we're not to worry about going long in the current stock market because the debt markets are now stable, but what signs will be the turning point of extreme caution? And there's a tag on here from another viewer, Golden Age Dave, that says, also we should be wary at this time of a black swan event. They can pull that trigger while everybody is giddy about markets. You'll wake up one morning and the markets will implode. It may be hard to exit at that point. So two parts of the question. One, besides the 10-year yield running away, are there any other signs that will give you a concern about the debt market? And then secondly, what about that thing about a black swan event?
Well, black swan, there's always that risk that there's an outlier. I mean, that's just something that always is lurking about. Of course, something like that could pop up at any time, and I don't believe it's going to be by accident when it does happen. I think it is going to happen. We're going to have some kind of an event. But again, when we're talking about something like that, people are not going to be able to point their fingers at it. And I know that's been a lot of talk lately, like this whole Evergrande thing. People were expecting it to implode, the whole, this is it, and that's it, look at it. No. That's how we knew. I immediately knew that was not it. As soon as people start talking about that's it, I know that it's not it. That's just the way I operate. It's going to come out of left field, in my view. It's going to be something that it's really no one is even anticipating. And that's how it always is. I mean, we could look back on history, and it's always this obscure thing that just blows up into something kind of crazy. And that's what I think is going to happen here. And look, what I tell people, and I actually been pushing this point home lately, is look, you trade the market you have at the moment, and you hedge for the future. So you take advantage of it, like. Make me, for example, I don't let anything get by me. I'm in the market. Everybody knows that. I own stocks. I trade around my positions that I have. And I'm also at the same time, and I've been doing this for many, many, many years, holding physical gold and physical silver, my favorite asset of all time. I've been in cryptos for a long time as well. I have no intention of getting rid of that because, again, when I tell people, why are we, people get angry, and I'm sure you hear the same thing as me. Well, gold and silver's not moving and inflation's skyrocketing. We expected it to go higher. Because what we're waiting for is the flip from risk on to risk off. And that's going to happen when this debt market implodes. And going back to what you were talking about, what are the real signs here? An uncontrolled sell-off in the debt market is going to happen. It's just a matter of time when we start to see that. Now, we have this new indicator I came up with months ago, the MMRI. Keep your eyes on that. Right now, when we were in the green, we're in the green for a while. And I was telling people, look, buy. Right now, I mean, risk is rising. And you can tell by the MMRI, it's in a yellow zone or in a moderate risk zone. If I see the MMRI, it just hit about 111. If I'm in this market and I'm seeing it do like 130, 140, in a rapid, and if it happens rapidly, it's about timing too. And then I'm going to say, well, hold on a minute. Maybe it is time to like maybe back out of the market a little bit. But at the same time, like for me, like being that, and I want people to stay hedged. I don't want people to have all their eggs in any one basket. I want people to stay spread out. So in the event here that we do get a black swan or some outlier event and it hits the market really, really hard, okay, I would expect to see other assets perform well while other assets are underperforming. So being hedged, being in risk off assets, which are physical gold, physical silver, and in my view, cryptocurrencies, I think these are risk off. I think they're massively undervalued. So it's just going to be, wealth is just going to move. Money's going to move from one reality into another. So you take advantage of things right now the way that they are. We ride it out until we start to see things like the MMRI spike very fast, like the 10-year yield spike at an uncontrolled pace. And to me, the debt market looks stable at this point, although it's a monster. It's the biggest threat in the history of the world. The debt market is a threat to life on a global scale because, again, we've been borrowing from the future in unprecedented amounts just to maintain where we are. And that mechanism must remain in place. We have to be able to borrow more and more exponentially just to maintain what we have. Once this is cut off, and if we get an implosion in the debt market, well, that's going to cut it all off. We won't be able to do that. That's going to, in my view, create a resource problem that people are not going to know what to do with themselves. And following that, we're going to get a credit freeze. There'll be no cash in the banks. It's going to be absolute pandemonium. And this is, again, leading up to a climax. And I think and I would be willing to bet most people understand that it's not going to be by accident either. Everything we're seeing, and I mean everything we're seeing, has been well thought out in advance. We're just seeing the side effect of it, unfortunately. So what do? We do the best that we can to stay ahead of it all. And that's really what I'm all about, is trying to look. I don't want to make decisions for anyone. I want people to take in the information that I put out, or anybody puts out, yourself too, and think for themselves. Okay, does this make sense to me? People know when they hear the truth. People know when they hear garbage too. So for the most part, I mean, there are those people that no matter what you do, you can tell them that water is wet or the sky is blue, they won't believe you. But for the most part, I think people get it. And if they hear someone say something that they perceive as real, they know it's real. And I think that and that's, I think, an evolutionary advantage to some people. I've been telling people for the longest time, you've heard me say this too, I think we're in a natural selection period too. I think there are people that get it, people that can see a little further down the road than other people, and other people, they're incapable of it. And I hate that, because I've been telling people, I want everybody to win. I don't think we need to have anyone lose here. And I look at every day, and not just talking about in the financial markets, but every day is, okay, where are the opportunities here? The opportunities to maybe make a change in my life, the opportunities to maybe make more money or lose less money, or whatever it might be, to become a better person, to do more for your community, to do more for other people. There's always opportunities here. So we have to look for these things sometimes. And that's, again, is an attitude, staying positive, wading through all this nonsense. Look, this can get anybody down. It really can. And sometimes you've seen me have complete meltdowns on my blog, which I do. Sometimes I freak out. It gets to me. But, it's a little avenue, a little vent. And but you got to stay positive in this. And once you do that, things become clear to you. Understanding the flow of money through the markets, for example, realizing where it's going. Again, cash doesn't go to money heaven. It just moves from one reality into another reality. And if we realize that this risk-on environment, in my view, is going to remain this way for a while until I see a red flag pop up again, spike in the 10-year yield, some other thing happens, MMRI gets out of control, something along those lines, until the drivers of the market, which is the debt markets driving everything, change, I'm going to stay long. I'm going to stay in the market. I'm going to use every drop in the market as an opportunity to add to positions I currently own. And I'm not just talking about stocks. I'm talking about drops in anything. If I feel like buying asset XYZ because I think it's a good deal, I'll buy it. And sometimes I'll get it right and sometimes I'll get it wrong. As long as I get it right most of the time, I'm a happy guy. This is not rocket scientist what I do. It really isn't rocket science. It's just a matter of, I think, taking in the environment and trying to figure out what the most likely outcome is going to be. It's really it.
One of the aspects of what you just described is the sense that you said, I'm into different things. You're not just in the stock market. You're not just in precious metals. You're not just in other tangible things. You're not just in crypto, but you have feet in these different worlds, some of which are risk on, some of which are risk off. One of the things you've talked to us about over the years is pulling profits out of the capital markets and storing them in tangibles, into tangible goods.
There's nothing wrong with that. I think that's an amazing strategy.
That gets back to this question from a viewer, which I think maybe you can just reinforce this concept with us, is that it isn't about being all in or all out of the market. Michael Fisher says, Greg, when the debt market implodes, and how much time would we have to get all our money out of the stock market? And the key thing that jumped out at me in that sentence is get all our money out of the stock market. And I think that's not what you've been recommending, to have all our money in over these years.
No. You can't have all your money in any one thing at all. You got to be spread out. You have to, and look, and everyone's different too. And people have different thresholds of risk too. I happen to have an extremely high risk tolerance. I really do. And maybe that's why I've been the way that I have for a while. Like if I see the market sell off, first of all, don't ever play with scared money in anything you have, or money you can't afford to lose. If you have even a single dollar in an asset that you can't afford to lose, you're doing something wrong. I know we all want to stay ahead of the curve here, but you don't want to be putting your rent money or your mortgage money into asset XYZ, no matter what it is. You have to think again logically, and don't be driven by emotion at all. When you get emotional about this market or a particular stock or anything, you're going to make bad decisions. And look, I don't always make right decisions too. Sometimes I'll do something that is just so absolutely stupid. I'll go, how did you do that? That's part of the learning process too. I don't care how long you're in any business. I don't care what whatever. Sometimes you're going to make mistakes. We learn from those mistakes. You say, okay, well, hold on a minute. Why did I do that? You think about why you might have done a particular thing. Or let's say you bought stock XYZ, you thought it was going to pay off, and all of a sudden it didn't. That's going to happen. That's just normal. That's the business that we're in. We're speculators here. Anyone that's in the market, I think, realizes that you're not going to be right all the time. It's impossible. I don't care who you are. But staying right most of the time is really not a hard thing to do. I don't expect to be right all the time. I'm not right all the time. I've made many errors throughout the mistakes. I continue to make mistakes. But again, learning from those mistakes is what makes the difference. It's how you deal with it. Is that what is the deciding factor on whether you're going to be successful in this business of trading and investing. My business model for myself has changed dramatically over the years. I used to be really a lot more reckless than I am right now. I'm not reckless at all. What I used to do up until just a few years ago is I was buying calls in this market, staying in front of my computer, constantly, and trying to rip out, profits here and there. And it becomes a very difficult way to make a living doing that. And you get some absolutely crazy swings in your bankroll, unbelievable. Sometimes it's hard to deal with. You'll have a phenomenal day, and then the next day is terrible. It became a little too much for me to do that. So I pretty much exclusively now I am a net seller of options onto the market. I don't say never. Once in a while, I might throw a few dollars into this, that, or the other thing and buy an option, like buy a call or a put. But for the most part, I am selling. I'm setting up credit spreads here, trading around positions I own. For example, let's say I'm in stock XYZ and I believe it's going higher here. I will sell puts onto the market. So I'm getting paid up front. I'm collecting that premium. Same thing with the credit spread. I'm getting money up front every time I trade. So I think this happens to you when you get older. You become more mellow and worldly, I suppose. I don't know. But I've taken a lot of those gyrations out of the market for myself out. I was getting too caught up in it. And I think it's very easy to do that. And I've been urging people for a while, especially with this market, it's extremely volatile. And I think it's going to stay this way. Going back to the market just real quick. I think in 2022, one of my biggest trends I said was you're going to see a lot of volatility in the market. I think you're going to see a lot of volatility in crypto as well. I think crude is going much, much higher this year, much higher. WTI just hit 86. I think it's over 86 now. And inflation is going to continue to surge. The absolute strength of the dollar is going to continue to fall. Meanwhile, its relative strength is going to stay high. I mean, these are things that I think are going to happen. And understanding these things, again, lets us position ourselves. It's just, to me, it just seems so simple. It really does. And sometimes I get fed up. And, just like you probably, my email box lights up like a Christmas tree, like a day like when the market sells off. It's just out of control. And I feel bad. I really do. When people start to, get afraid like that, I realize they're gonna make a bad decision. And like today, for example, my email box lit up like a Christmas tree. I'm like, oh man, there's a lot of people out here who are probably gonna make a bad decision. And I urge these people to just look, this isn't for everyone. If you don't want to trade the market, that's cool. There's nothing wrong. You don't have to be in it, but at least you should be hedging yourself for what's coming. If you had to be in one single asset, Greg Mannarino is going to tell you what it is. I think it's physical silver. It's my favorite asset of all time. I love it. I think it's an incredible hedge for what is eventually going to come. And that is a debt market implosion. Rates are going to spike, pressure on the stock market, and it's going to happen very rapidly, like that question that was asked. Markets don't slow burn. Generally, it's an elevator down. It's very fast because everyone runs for the door at the same time. And that's what generally happens. So look, with regard to the market here, I think the most simple, basic strategy that someone should use is, first of all, I don't get into all this kind of like meme stock nonsense, like get on the bandwagon of something that's taken off to the moon or, you got to no, I don't do that. What I do is I'd like to own companies that no matter what happens, I would like to hold it for the longer run. Let's say, for example, I'm in a company that I really like that's paying me a dividend. I don't even look at small caps. Sorry, people ask me a lot of questions. Small cap stocks. It's not my thing. I've been telling people for forever. I'm a large cap guy. I don't even invest in small caps. I'm not saying that people shouldn't do it. Everyone has their little niche, a little thing that they do. I like large caps. I like large cap dividend paying stocks. I want that company to pay me to own their stock. So if I'm in company XYZ and they're paying me to own it and it craters 40, 50, 60%, well, I'll probably end up buying that. I'm talking about in a real meltdown. And this market is going to melt down. I mean, it's going to melt down bad at one point. I think it's pretty straightforward. I think we all realize that. At least I hope we do. I am in this market on the long end, but I clearly realize that things are going to change and they're going to change rapidly. So we just got to be ready for it. That's why we stay hedged. This is how I can sleep at night too. I mean, by understanding that, I'm not just in one asset that if no matter what, I'm tied to that thing, like I'm married to that one asset. That's a problem. So if people have the ability, they should be diversified. They should be in a number of different assets. At least be long, large cap stocks that pay you dividend. At least be in hedging against the debt bubble. And be betting against the debt, becoming your own central bank and holding a hard asset, physical gold and physical silver. And if you are so inclined, you should have some crypto in your portfolio. Not all in on this stuff, but you should have some. I think people need some exposure to that. And if people want to go out further, you should be, owning other commodities too. I mean, there are a lot of ETFs out there, exchange traded funds, that will allow you exposure to things like any commodity, for example. Just Google it. If you like commodity this, just what exchange traded fund will track this commodity, no matter what it is. There's even one for water. I mean, you name it. They're out there. So people have the ability to do anything they want to in this market, but do it smartly and understand why you're doing it. Okay. Not just I'm doing this because I think it's fun. When you want to enter into owning an asset, no matter what it is, why, ask yourself, why am I doing this? Why do I want to put cash to work in this as opposed to maybe something else? So I think that's another issue that people have too, that comes over time. You have to ask yourself, why are you doing what you are doing? What are you trying to achieve? What is your end game? Your personal end game. And if you're realizing what the real end game is here, central banks, what they're doing, they're inflating, they're not going to stop. They've been doing this for years. This is their goal, in my view, to own it all, to be the lender and buyer of last resort. If we realize that, well, that makes our life even easier too. And that's the whole thing, realizing the drivers of the market. And then you and I and anyone else watching this, everything just becomes crystal clear.
This question comes up from a couple different askers here. Think for Yourself says, are you mainly self-taught about markets, etc., or did you have a mentor? Are there any other good names to listen to?
I'll tell you, when I first started on this, I was a kid, and I had no idea about anything. What got me started was the movie Wall Street. That's really what it was. I was like, well, Gordon Gekko's a cool guy, even though he was involved in insider trading or whatever it might be. I just thought it was a cool thing. And I was, like I said, I was an impressionable kid at the time. And this is 1986 or 87. I remember a long time ago. But I did have one guy who kind of did help me out a little bit. But this was, just kind of a little bit taught me about the market. And this is after I actually started working at Bayer. When I got that job over there, I had no idea what I'd be doing. My dad actually got me the job through a friend. It was the craziest thing in the world. I told my dad, hey, Dad, I think I want to learn how to be a trader. I want to learn about Wall Street. And that was like, my dad was like, oh, really? He was like, well, I know somebody. I was like, maybe he can help you. And so my dad ended up getting me that job over there through a friend. He's like, okay, Greg, I remember sitting down like it was yesterday. I sat down in his office. He's like, okay, Greg, what do you want to do? I'm like, I have no idea. I said, I want to learn about the markets. And he didn't help me at all. I ended up getting scudded around from this to the other thing. But this one guy named Steve helped me out. He kind of like showed me a little bit, told me about how the markets work. And he showed me like technical analysis. And I took a real interest in it at first. I was like, wow, this is pretty fascinating. And that's what really set my feet on the pathway. But other than that, like learning the markets to me has been I've been doing it. I've been in the markets for a very, very long time. Even when I was in medicine for years, I was always dabbling in it. I was trying to figure out how it worked, but no one ever really taught me and showed me like the deeper kind of inner workings of it. In order to do that, you have to be in it. You have to like start putting some money in the game, and you have to get out there and you got to start talking to people. You got to make friends. You got to listen to people that maybe know something or are willing to teach you about the market. It's something that most people have no idea about how markets work, or even what a derivative is, or even like or anything, the flow of money, where it moves to, how central bankings work, the fractional reserve system, the petrodollar, fiat money. They have no clue at all. They're not taught this stuff in school. So you learn this stuff by doing it, by reading, for me. And to me, it's a challenge. Like I want to know how something works. When I was a kid, just to show you how Greg Mannarino's brain works, it's kind of twisted. My dad had bought a 1969 Camaro Super Sport with a 4-speed, and I loved the car. I was like, wow, this is a pretty cool car. Well, my dad was at work one day. I took the car apart completely. He didn't even know I did it. I rented an engine hoist. I pulled the engine out. Me and my buddy Joe, we took this thing apart to the nuts and bolts, everything, the transmission, the motor, the rear. And I just wanted to see the inner components. What makes this thing? I had no idea what they were. I didn't even know what a piston was. I just knew I was holding this thing in my hand. So I was trying, and I remember my dad came home that day and he's like, okay, Greg, now put it back together again, very calmly. So what I did was I immersed myself in that. I wanted to learn everything there was about whatever that thing was, the internal combustion engine, how it works, why it works. And I became obsessed with that. And that's how I am with a lot of things in life. And the market is the same way. I wanted to know why it works. How is it that it does what it does? Who's driving it? What forces are actually behind it? And that drove me to just read everything I could possibly find, books and articles online. I just wouldn't stop and trying to fill my head with whatever I could as I was throwing little bits of cash into the market over the years. So it was kind of a slow process for me. But what really got me going with this was the meltdown, the big meltdown, because I saw what it did to people. Me too. I mean, when I was in the market, I didn't know anything like I know now. I lost basically everything I had saved up until that point during that meltdown, which to me was a lot of money. And I saw friends of mine get destroyed. One of my really, really good friends inherited a lot of money when his father passed away, went out and bought houses at the top of the market, and got melted. And this happened to a lot of people, and it hurt me. I was like, this is not right. I was like, something's very wrong here. I want to figure out what's going on. That's when I started blogging, when I started talking about this. And that's how I got to meet people too, through the internet. Now I talk to everybody. Look, I've said this, people know this. I know people at all the banks, all the major banks. I talk to these people almost every day. Hey, Greg, what's going on? Blah, blah, blah. What people don't realize is a person that is involved in the market, whether you're a trader, whether you're an investor, and what are you really doing is you're trying to gain information. You're trying to find things out. Okay, on top of keeping the big picture in mind, you hear things. People like to talk about things when it comes to Wall Street or the money or where money is going or where it's coming out of or a particular stock. So, as you become more involved, you meet more people and people talk. So you take advantage of it. And there are people, believe me, out here that care about what's happening to people. People that work at the big banks see what's happening to people, and really people I'm pretty close to, and they're disgusted. They're like, it's not right what's happening to people. And they watch my work. I mean, it's funny because I sit there and I do my video blogs, and I know that these guys at these big banks are watching my blog because they're friends of mine, but these people care. They want people to understand how the markets work, but at the same time, they want to keep their job, So I want people to realize that there are people out here who even work at the big banks who understand that people are getting hurt and they don't like to see that. And that's, I think, where I come in and try to tell people, look, this is what's going on. And again, like I said earlier, I don't want to tell people what to do. I want them to make up their own minds. I think that's the most important thing is what I'm saying, does it make sense? If it doesn't, that's fine. If it does, look into it. Start your journey now by, hey, you know what? Greg said this. I want to see if this is actually true. So do a little research on your own. And that's what I want people to do. And that's how you learn this business, because this isn't taught. You could go to every business school on the face of the earth. You're not going to learn this stuff. They don't teach it. I have people who have MBAs I talk to all the time. They're like, Greg, how do you know this stuff? How do you learn it? I'm like, I don't know. it just comes up in conversations over the years, and it's just, you're able to put this together.
I can echo something that you said about people involved in the financial industry who really do care, despite the fact that they know they're in the belly of the beast. You mentioned earlier, and this ties back to something you said way back at the beginning about this natural selection that you're afraid is going to happen between people who can see a little bit farther ahead down the road and those who can't see what's right in front of their face. I hold a lot of responsibility for those people who are having difficulty seeing, to the fact that they're being misled in many cases by this mainstream message that they've been getting for decades from their so-called financial planners who are telling them, just stay long in the market, stay 60-40 balance in stocks and bonds and ETFs, and it'll always, sure, there'll be dips, but it's always going to come back, and it always has and always will. And really concerned about the plight of those people. And so I was going to mention, I too have in contact with some of those financial planners who work with people, and some of these people have a heart of gold, I'll call it. They're trying to educate their clients, despite that it isn't what their employer, these big firms that pay them to sell investment products want them to do, but they're trying to educate people about the effects of inflation and the alternatives of assets that are not in a bubble as the other are, so that they should probably have some hedge and have some protection and be their own central bank, that kind of thing. So it's really important to know that there are good people who are, and I guess that's in every field, medical, you mentioned you have a medical background. There's people in the medical business who are having to really walk carefully these days in order to give people advice that's not just the main narrative. I had to laugh at myself when you were talking about putting your dad's car back together, because I took apart and completely put back together and rebuilt a 1966 Plymouth Barracuda Formula S. And after I had it all back together, I found this part and I'm holding it in my hand and I'm going, oh dang, because it was the oil sump pickup that had to be inside the bottom of the engine, so everything had to come back out to get that thing back in there. It was a terrible day, but I learned a lot. And then the last thing that I wanted to see if we could get you to weigh in on, you talked about the big picture, and you've talked with us about that before, about people, we walk through our lives and we're seeing day by day the stock market numbers going up and down, and it's a mystery. To a lot of people, they don't know what's going on. But there's a big story that's got a long story arc to it that's been going on for a long time. And there are players at a much higher level in this story than the average person. Talking about the end game, a questioner asks, the World Economic Forum states that by 2030 you will own nothing and be happy. How do you see that statement unfolding?
Look, I think that what they're doing here is, again, something you and I have spoken about. I've been warning people for the longest time here that we're in the middle of a wipeout of an entire class of people on a global scale. And I've been warning that we are going to go back into a feudal system for an extremely long period of time. What they're doing now, look, the three-tier society is a new thing for since forever. People were ruled by kings and queens and stuff, and they were serfs, the people that served the land. They serve their overlords here, and that's really what they're working towards here. Power and wealth consolidated in a very small area. It's been like that for a long time, but it's getting a lot worse. And I've been telling people that the rich and the well-off, and they've been getting more rich and more well-off, while people here in the middle class, they're getting destroyed. I mean, you look at some of these numbers with household debt, personal debt, credit card debt. It's surging out of control. A phenomenon I actually said would happen a while back. I said what's going to end up happening is you're going to see people who are in the middle class who want to maintain that status, and they're going to do at least maintain the illusion by borrowing. And unfortunately, that's exactly what we're seeing here. And what they're doing to themselves is they're just assuring that they're going to fall into that lower rung of society here. I've told people, I've tried to put it into an extreme. I'm like, if you are a member of the middle class, you have a tattoo of a target on your face, and you got to try to get that off. Most people are not going to get that off, and they're going to fall to that lower rung of society. But we're watching that kind of slowly burn. And unfortunately, I think, and I really believe this to be true, that when we get the grand finale, and I mean grand finale, and it's going to happen, when we get that implosion in the debt market, and this whole landscape is going to change so rapidly and so fast, I think it's going to take many people by surprise. Look, I'm not with regard to the market, and I want people to understand this. I am not a guy who tries to pick tops or bottoms. I think that's a loser's game. I learned the hard way that's very difficult or nearly impossible to do. You'll get lucky once in a while. I've gotten lucky once in a while, but for the most part, it's a bad business to be in trying to pick tops and bottoms in the market. I just look at trends, where things seem to be going, and where the cash seems to be moving at the time. But again, going back to earlier about staying hedged, about having yourself spread out, it allows your portfolio to sustain shocks. And there is going to be that moment of shock that's going to come. And, look, no matter how smart you are, no matter what you're doing, you're going to have a part of your portfolio that's going to get hit in one way or the other at one time. Look, I sincerely doubt that I'm going to be the first guy out the door at that point when the market does melt down. I'm hoping I'm going to be one of the first people out the door too. But at the same time, like I said, I'm not in anything here that's really highly speculative. I've really changed my perspective. What I've been telling people for the longest time, large cap, dividend paying stock. So even in the event of a market that takes a humongous hit, do I really want to dump these positions, or do I want to add to them? Or do I want to wait for the market to bottom out? Because I'm going to tell you what's going to happen. Markets always do one thing, and we can count on this to happen over and over again, and that is overreact. Markets overreact to the upside, and they overreact to the downside. And I believe at one point here, when we do get the big one, which is, again, the meltdown in the debt market, which is the driver of the stock market. Stock market is a derivative of the debt market. Okay, we're going to get a very large overcorrection, or it's going to drop way past its fair value. And I think there's going to be incredible opportunities for people to get in on things at the bottom of the market, especially if they're owning companies that are tried and true, large cap dividend paying stocks. Companies here, they have value. They have people that work for them that are working towards something, and these companies are real. Maybe they're overvalued, depending on your perspective on what's going on here. The whole market, in my view, is distorted beyond belief. But I still think, and I believe this, that at the moment of implosion in the debt market, when the market does react to that, there's going to be opportunity there too. There's always opportunity. There's a lot of people who talk about, what I speak about as doom and gloom. It's not doom and gloom. It's about where are the opportunities, because they're everywhere. Every day there is opportunities to make the market work for you. It could be anything, but I'm just saying with regard to the financial market. So, I don't know how I will. Like, I own companies that I would like to hold, like, until whenever. So in the event that we do get a big meltdown in the market, I still think that they would have value. Their stock price might drop by 70%. But what does that mean? Does it mean now that they're just worthless? No. It means that they're probably worth a lot more because the market's going to overcorrect. And I know that's going to happen because it always does. So again, when this happens, I don't plan on stopping my blog anytime soon. So hopefully I'll be here to guide people, or at least tell people what I think is going on, so that they can think for themselves and decide what they want to do. That's it. Pretty simple.
I promise that was the last question, but there was just one short one here, and maybe as a short answer. We asked it to you like 4, 5, 6, 7 years ago, and I ask it again. Jerome Smith says, "Is Greg a prepper?"
Oh yeah, I mean, I wouldn't say I'm a hardcore prepper, but I think I'm ready. I don't personally have a lot of stuff stashed around here in the event that this whole thing is going to come down. That's not really my expertise, but I have friends who are, and who are way out of here, way off the grid. And they're like, "Hey, Greg, you know what?" And this is, again, why it's so important for people to make the right connections, is in the event of something like that, I have a getaway plan. I have a few things that I can do in the event of a total meltdown. And I think people need to be ready. I think they need to be prepared for a worst case. You always have to be. You must have the high ground all the time. And even in the event that the worst case scenario doesn't happen, at least you were ready for it. So if it doesn't unfold as bad as some people may expect it to, you're still ready for it. So you can't let your guard down, I don't think. But you also can't be paranoid. You can't let it keep you up at night. Some of this stuff used to, I think a while back, it used to get to me a lot worse than it does now. But that's part of the growing process too, and again, getting out here and connecting with people in the community, like-minded people. We have this thing called an internet. You don't have to. Unfortunately, I wish people would get closer to their people in their own neighborhoods. Get to know people, your neighbors. Do something really amazing, like say hello to someone that you may cross paths with. You never know where that's going to lead. But I've been urging people. I tell people we are our greatest resource. It's us. Forget about the markets. Forget about money. That's all like a side effect of it all. But we need to connect to people We need to understand that we are important to each other. We need to love each other, care about each other, be charitable to each other, treat each other like human beings. Don't let the freak show divide us and conquer us. That's all they want to do. This is how the few have controlled the many since forever, by keeping people divided. No, it doesn't have to be like that. I just moved into a new place. I'm out here making friends to my neighbors. I see them. Hey, how you doing? I walk over them. If I see some guy outside, working on his yard, I'll go over there. Hey, you need a hand? Hey, my name is Greg. I just moved in. That's my house over there. Do these kinds of things. Connect with people, because we are really our greatest resource, period, the end.
Greg, that message has been consistent from you throughout the years. Actually, frankly, all your messages have been. And as I mentioned, a lot of your library of interviews that you've done, either podcasts you've done or interviews we've done with you, have aged exceptionally well. And we're just grateful to have you here as exhorting people to take care of their family, take care of themselves, take care of the future, become aware and prepared, and take care of others. And that mission, that message that you bring about let us not be divided from each other, but help each other out, is something that we sorely need now and going forward. So we're always grateful for your presence here on Liberty and Finance. And just on behalf of all of our viewers, Greg, remind us where they can watch your work and where they can get plugged in.
On my website, traderschoice.net. But I thank you for giving me the opportunity to be here and to talk to people about these things. We got to make a difference in the world. That's what I tell everybody. Make a difference. Think about one thing you could do a day, just one, that would benefit somebody else, not just yourself. What can you do for your society, maybe your country, or something you care about? Do something for someone else before you expect something to be done good to you. And if you maintain that kind of an attitude, good things are just going to come your way. It's the nature of the universe, in my view. And that's why I'm out here too. I want to make a positive difference, and I want people to understand what I'm talking about and then make their own choices. Anyway, thank you. Thanks for having me.
Thanks for being here, Greg. Take care.
You too.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price, with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.